But I must say that, actually I have been reading a lot of books that you have been reading. And I found out that, the books are the best to describe the Buffett methodology in a simple way. So let me ask you this. The most valuable lessons that you learn from Warren Buffett himself, which is unique and different from the other books on the shelves are?
I think the most unique thing that I learned directly from Warren was patience. It's something that the individual investor finds it most difficult. So Warren really does a great deal of research, a great deal of reading, waiting to buy the investment, the business, at the right price. So I think the patience is the biggest part of the discipline.
Patience at the right price and at the right time as well.
Right.
But what about in terms of the competitive advantages and also the qualitative analysis of the business that he want to buy? So what are the factors that he consider?
To Warren, what he does, intrinsic value of a company is the projected annual compounding rate of return the investment will give him in the future. So once he can analyze that, first he looks back at least of 10 years worth of earnings.
Right.
Have they been consistent? Have they been strong? Have they not been erratic, just slowly going in the right direction? And then once he can project a future value based on that, he will be able to determine how that and how long it will take to get to that future value. He can compare it with a good amount of business sense to other investments.
So he basically look at the fundamental of the business first.
Oh, yeah.
And then he tried to predict and try to understand what's going to be in the future in terms of the earnings. And then he look back in terms of the intrinsic value itself.
Right. First, as you said, he finds an area that he's comfortable with, that he understands. And then he does a lot of research on the companies, their past PE ratios, their future PE ratios, and then based on the earnings from the past, he can reasonably predict what they're going to be doing in the future.
Right.
And that's what he bases his buy decision on.
Sure. But I think you mentioned on your books as well that, the business that have more durable competitive advantages and also have more growth consistently would be, the sensible or possible the business that would interest Warren Buffett. So could you please, define durable competitive advantages and also the growth?
A durable competitive advantage generally is a company that has what is a consumer monopoly is in place. So you already have a dedicated consumer base. And then the durability of it is the fact that it's earning monopoly-like profits that can basically get a company through any kind of event, whether that is a market correction or whether it's a one-time mistake a company might make.
Right.
And also, a company that has a durable advantage is generally one that can increase its price, and the consumer will still buy it. Based on if it's Coca-Cola and the price of sugar goes up, they can raise their price and people will still buy Coke.
And that would be the
durable
competitive advantages. Right. What about in terms of the growth? How can you define the growth of the companies?
Well, he learned that retained earnings are a great thing that over time will eventually increase the per share value of any stock.
Right.
The growth is, again, the projected future earnings the company will make. So in other words, if a company has been making something for 10 years, say, it's more likely than not, it'll be still be in business 10 years from now. So that gives him a basis of comfort.
So after he understands and the business and try to find the intrinsic value, and also leading to the so-called the MOS, the margin of safety,
The moat.
right? So how would he actually evaluate the MOS of the business itself?
Warren tries to reduce risk, and by reducing his risk, all of those factors factor into reducing the risk. Then really it becomes a matter of price. And so he buys, he's not jumping up and down when the market is soaring.
Right.
He's jumping up and down when the market is
Was
falling,
down, yeah.
or a certain company,
Right.
because of certain things that may happen, they're undervalued. So he is always looking for the undervalued stock. So what the book value is, under book value is what
Right.
he's buying.
Sure. And he also said the first rule of his is not to lose money or not to lose the principal. And the number two is not forget the number one. So what is he trying to imply to the viewers?
Basically that's a really interesting question, because in 1986, Forbes 400, this is where that quote came from. Rule number one, don't lose money. Rule number two, don't forget rule number one. And what he was really talking about was compounding. Warren understands that money compounding over a period of time is really the valuable asset. So don't lose money because you don't have the ability to invest it in something that compounds. So, when people talk about his lifestyle, he really lives what he preaches. So for the young people or anyone, don't live beyond your means. Always save a little money for investment, buying opportunity. Of course, be as debt-free as possible.
Could you please give some example of the best investment of Warren Buffett to the viewers?
Well, I would almost there's a couple.
Sure.
Right off the top, you can say Coca-Cola, because it's his second largest holding.
Sure.
But the Washington Post has given him something unbelievable, like 500,000% return from his original investments in the Washington Post.
So could you please elaborate on how to pick those stocks into his portfolio and to be the winning stocks of his all time now?
Again, he picks the stocks that, for instance, if the stock market closed tomorrow, people would still be drinking Coca-Cola. So there's no chance that anything. Once someone asked him, if you were going to be put on an island and you didn't read a newspaper or anything for 20 years, where would you put all of your money? And he said Coca-Cola.
Oh, because Coca-Cola has durable competitive advantages.
Durable competitive advantage, consumer-like. It's branded in your mind, in the consumer's mind. When it came to soft drinks, they always bought Coca-Cola. They didn't buy the generic Coke or generic soda.
Right.
They bought Coca-Cola.
So it's the power of the brand.
Power of the brand is everything.
And that's the very important point. Has he ever made any mistakes during the past years?
I think the one he points to the most was when he bought U.S. Air from Rick Guerin. He just didn't. It was, again, something that was, he calls it his circle of competence. So it was outside of his circle of competence. He didn't realize that it was a price-based business, not a monopoly, consumer monopoly. So it was based on price. They also had some labor issues that a lot of the other companies don't.
So he didn't understand truly the true value of the business at the time.
At the time, he didn't understand that he went a little out of his circle of competence. Yeah.
หุ้นในพอร์ตที่ทางวอร์เรน บัฟเฟตต์ชอบนะคะก็ต้องเป็นสินค้าอุปโภคบริโภคนะคะผูกขาดแล้วก็ใช้ซ้ำด้วยนะคะบริษัทนี้จะมีผลประกอบการที่ดีค่ะเกิดวิกฤตกี่ครั้งนะคะหรือว่าแม้กระทั่งเรื่องของเศรษฐกิจแล้วก็วิกฤตผู้บริหารที่ทำผิดพลาดไปก็ยังสร้างความเสียหายแบบชั่วคราวเท่านั้นนะคะแล้วก็เป็นบริษัทที่สามารถเพิ่มราคาโดยที่ลูกค้าไม่บ่นนะคะคือผลักภาระไปให้กับผู้บริโภคได้แล้วก็ยังคงมีแหล่งซื้อเข้ามาในสินค้านั้นอย่างต่อเนื่องนะคะทางบัฟเฟตต์นั้นเขาจะถือหุ้นไปเรื่อยๆค่ะจนกว่าจะเห็นว่าตัวเองนั้นคิดผิดเขาถึงจะมีการขายออกมาบ้างแล้วก็ไปซื้อตัวอื่นที่ให้ผลตอบแทนที่ดีกว่ามีการยกตัวอย่างด้วยนะคะที่เป็นหุ้นในดวงใจอย่างโคคาโคล่าก็ถือว่าเป็นการเลือกลงทุนของวอร์เรน บัฟเฟตต์เหมือนกันนะคะเป็นสินค้าที่คนอื่นดื่มตลอดไม่ว่าตลาดหุ้นจะปิดหรือไม่ยังไงคนก็ยังดื่มโค้กอยู่ดีและสิ่งที่เป็นเรื่องของเป้าหมายการลงทุนเขาก็คือจะต้องเป็นสินค้าที่มีพลังเกี่ยวกับแบรนด์หรือว่าตรายี่ห้อนะคะบัฟเฟตต์เขาก็จะเข้าไปเลือกเหมือนกันนะคะ